So apparently everything is fine. Totally normal market behavior. Nothing to see here. Bitcoin drops below $69,000. Altcoins getting smacked. ETF money quietly walking out the back door. And the headlines are like, healthy consolidation. Yeah, okay. Meanwhile, the Fear and Greed Index just spent days in extreme fear. We're talking single digits at one point. That's not nervous. That's, I don't even want to open the app fear. But here's where it gets interesting. Bitcoin didn't break. It didn't cascade lower. It just held right there in the $67,000 to $68,000 range. So let me get this straight. Everyone's scared. Money's flowing out. Macro's shaky. And Bitcoin's just sitting there like, I'm good. And that's the part people miss. Because markets don't usually give you this kind of disconnect for long. Either this thing rolls over and we get that next leg down, or this is exactly what strength looks like right before most people realize it. So what are we actually looking at here? Weakness or something building under the surface? Let's break it down.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's get into the market, because on the surface, it looks slow, but underneath, there's a lot going on. Bitcoin right now sitting in that $67,000 to $68,500 range. After failing to hold above $71,000 earlier in the week, we saw that rejection on the 26th, and since then, it's been a controlled drift lower. Not a crash, but definitely not strength either. Now, technically, this is where it gets interesting. We're holding above that $66,000 support zone, but we just can't seem to reclaim $70,000 with conviction. So basically, nobody's in control right now. This is what we call a decision range, and markets don't stay here long. If we lose $66,000, that opens the door for acceleration to the downside fast. But if bulls can step in, reclaim $70,000, and hold it, that flips the momentum right back. Now let's look at Ethereum. And honestly, Ether is just not helping right now. We're sitting around $2,020 to $2,070, still making lower highs, still under key moving averages, still lagging behind Bitcoin. And historically, that's not exactly a bullish sign. When ETH isn't leading, it usually means the market doesn't have strong conviction yet. Now, altcoins, this is where you really feel it. Sol, struggling in the mid-80s. XRP, stuck in that slow grind lower. And overall, volume just isn't there. This isn't panic anymore. Nobody's freaking out. They're just not showing up. Now let's talk sentiment, because this is the real story. The Fear and Greed Index spent most of this week in extreme fear. We saw readings as low as 9 to 13. That's deep fear. That's I'm sitting this one out type of market behavior. Now we've bounced a bit back toward the high 20s, but let's be real. Sentiment is still fragile. And here's why that matters. Because historically, markets tend to make major moves when sentiment is this one-sided. Either everyone's wrong or things are about to get worse. And zooming out, this isn't just crypto. We've got ongoing uncertainty in the Middle East, oil pushing higher again, macro pressure still in play. So this is a risk-off environment, and crypto is reacting to that. So here's the setup right now. Price equals range-bound, sentiment equals fearful, flows equals weakening, conviction equals low. And when you see that combination, it usually doesn't stay quiet for long. We're either building a base or setting up for another move down. So keep it simple. Watch these levels. $66,000 must hold. $70,000 must reclaim. Below $66,000, things can speed up quickly. Above $70,000, momentum comes back. Now here's where things get even more interesting. Because while price has been moving sideways, what's happening behind the scenes this week might matter even more. When we come back, we'll get into the nitty-gritty. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, so let's zoom in on what actually triggered this move lower, because this wasn't random. Bitcoin dropped over 3% on March 26th, falling from above $71,000 down into that $67,000 to $68,500 range we're sitting in now. And it didn't happen in a vacuum. At the same time, we saw altcoins drop 4 to 5% across the board. Ethereum, Solana, XRP, all moving together. So what caused it? This was a macro-driven move. Optimism around Middle East de-escalation, specifically around Iran talks, started to fade. At the same time, oil prices began moving higher again. And when oil goes up, markets start pricing in risk, because nothing says calm and stable like rising energy costs and geopolitical uncertainty. So what we got was a classic risk-off reaction. Traders pulling exposure, derivatives getting flushed, liquidations kicking in, and that's what accelerated the move down. Now here's the key part though. This wasn't a full breakdown. It was a reaction. Bitcoin didn't lose structure. It didn't cascade lower. It just repriced quickly. So where do we go from here? If Bitcoin can continue to hold that $67,000 level, we could see a move back up towards $71,000 to $72,000, especially if we get any signs of geopolitical cooling. But if that $67,000 level breaks, that opens the door to a deeper move into the $64,000 to $65,000 zone. And that's where things start getting more aggressive. So the real question here isn't just price. It's whether this was a one-time reaction or the beginning of something bigger. Because while price was pulling back this week, something else was happening under the surface. Sentiment didn't just drop. It collapsed. Like, close the app and pretend crypto doesn't exist levels. After the break, we're going to look at why fear stayed extreme for so long and why that might actually matter more than the price drop itself. Stay with us.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, welcome back. So let's talk about sentiment. Because if you want to understand this market right now, this is the story. The Fear and Greed Index spent most of this period down in extreme fear. We're talking readings between 9 and 13. That's not just cautious. That's I'm not buying anything ever again energy. And here's what makes it more interesting. This wasn't just a quick spike. This was a prolonged stretch, one of the longer fear streaks we've seen in recent cycles, which tells you something. This market didn't just get nervous. It stayed nervous. Now, over the weekend into today, we've seen a bit of a shift. The index has started to climb, moving up into that low to mid-30s range. Still fear, but not panic anymore. So what changed? Bitcoin stabilized. No new breakdown, no major cascade lower. And more importantly, selling pressure started to ease. Not because everyone got bullish, but because most people already sold. And that's how these phases usually work. First comes the drop, then comes the fear, then comes exhaustion. And that's where we might be right now. But let's not get ahead of ourselves. We are still in the fear zone. Macro is still uncertain. ETF flows are still shaky, and confidence hasn't fully come back yet. So what does this mean going forward? If we continue pushing toward that 35 to 40 range, that starts to signal a potential bottom forming. Because historically, markets don't stay in fear forever. They transition out of it. But if sentiment rolls back over, drops back below 20, that's when volatility picks up again, and things can get messy fast. So right now, we're in that transition phase. Not panic, not confidence, somewhere in between. And usually, that's where the next move starts building. But sentiment is only one piece of the puzzle, because behind the scenes this week, money was moving, and not always in the direction people expected. After the break, we're going to look at ETF flows, because what institutions did this week might surprise you. Stay with us.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at wholeshotcoffee.com.
Welcome back, everyone. Now, let's talk about a part of the market people really watch. Institutional money. Because while price has been holding, money has been quietly leaving. Bitcoin ETFs saw consecutive outflows again this week. We're talking roughly $124 million to $171 million in net redemptions across multiple sessions. And this wasn't a one-off. This has been a trend, including a stretch that started last week and just kept rolling into this one. So while everyone on X is saying institutions are buying everything, the data's like, not this week. Now, to be fair, year-to-date flows are still positive, so this isn't a full reversal, but momentum has clearly slowed. And that matters because ETFs have been one of the main drivers of this entire cycle. Now let's talk about why this is happening. This lines up almost perfectly with the FOMC decision, rising macro uncertainty, ongoing geopolitical tension. In other words, institutions did what they always do. They reduced risk. Not panic, not dump everything, just a quiet, let's chill for a second. Now here's the key question. Is this temporary or the start of something bigger? If Bitcoin can reclaim $70,000 and hold it, you'll likely see those inflows come right back because institutions follow strength. But if outflows continue, that creates pressure. And that's when you start looking at levels like $65,000 coming into play. So right now we've got price holding, barely, sentiment recovering, slowly, and institutional flows weakening. That's not a clean setup. That's a market trying to figure itself out. But here's where things get even more interesting. Because while money has been moving out, some of the biggest players on Wall Street are starting to change their tone, and not in a bullish way. After the break, we're going to look at a major change in crypto Twitter and what it could mean for Bitcoin moving forward. Stay with us.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, this one's a little different because it's not about price. It's not about ETFs. It's about the vibe. Over the last 2 weeks, a lot of people have been saying the same thing. Crypto Twitter feels dead. Not like bear market 2022 dead, but like, why am I even refreshing this app dead? Engagement is down. Timelines are quiet. No big airdrop hype. No crazy degen wins. No dopamine. And if you've been around long enough, you've seen this before. Because this is exactly what happens in these phases. When price chops, when volatility drops, when uncertainty sticks around, the crowd disappears. All those next 100 times gem accounts, yeah, they're real quiet right now. But here's the part most people miss. This is not a bad sign. It's actually the opposite. Because when the noise goes away, that's when the real work starts. Builders are building, smart money is accumulating, and long-term players, they're not posting, they're positioning. And historically, these quiet periods, they don't last. Because the second Bitcoin makes a real move, everybody suddenly never left. But right now, this is that in-between phase. No hype, no excitement, just patience. So what happens next? If Bitcoin starts trending higher, you'll see that timeline come back to life fast. New narratives, new players, new noise. But until then, this is where accumulation happens. This is where conviction gets tested. And this is where positions are built quietly. So if it feels slow right now, that might not be a warning. It might be the setup. Now, while things may feel quiet on the surface, behind the scenes, there are still big moves happening, from regulators to institutions to long-term positioning. After the break, we're going to look at the bigger picture, because what's happening structurally right now could matter a lot more than the noise. Stay with us.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, let's zoom out. Because while price has been choppy and sentiment has been shaky, the bigger picture is still moving forward. This week, we saw continued progress on the regulatory side, token classification getting clearer, ongoing movement around the Clarity Act, and more coordination between agencies, which, long-term, is exactly what this market needs. Less confusion, more structure, and fewer gray areas for institutions. At the same time, whales have been buying, large wallets quietly adding thousands of Bitcoin, even while some early holders were selling. Roughly $100 million plus in OG supply hitting the market, and even small government-related transfers, like Bhutan, adding a bit of noise. So what does that tell you? Supply is rotating, not disappearing, not flooding, just changing hands. Weak hands out, stronger hands in. Now, we also need to talk about this, because this is peak crypto. A viral post started circulating claiming the Clarity Act was basically done with confirmation from Senator Loomis. Sounds big, right? Yeah, one problem. The video was from 2025, talking about a completely different bill. And within hours, people started calling it out. But not before it spread, like it always does. And this is important, because it shows you exactly how narratives form in this space. Sometimes it's real progress. Sometimes it's recycled hype. But stepping back, the actual trend is positive. Regulatory clarity is improving. Institutions are still engaged. And capital is still rotating into stronger hands. So where does this go next? If the Clarity Act continues progressing, that opens the door for new products, more institutional participation, and larger capital flows. But if momentum stalls or enforcement ramps back up, that could keep volatility elevated in the short term. So once again, short-term noise, long-term structure. All right, that's the news. Now let's get into the part of the show where the internet asks the questions and sometimes regrets it. It's time for the Proof of Thought Mailbag. That's coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time. The segment where the internet brings the questions and I bring the reality. First up is from @ChartWizard99 and asks, BTC holding support, but no breakout. Is this bullish or just delaying the inevitable? Ah, the classic. This is what we call a decision zone. It's not bullish and it's not bearish. It's tension. Everybody wants confirmation. The market's like, you'll get it when I'm ready. Next question is from @MacroMikeAlpha and reads, if ETFs are seeing outflows, does that mean institutions are done buying? Yeah, institutions just packed it up, closed the office. No, it means they're managing risk. They buy strength, they reduce exposure when uncertainty rises, and they don't announce it on X. All right, next one is from @DGenDylan420. Bro, nothing is moving. Is the bull run over? Yeah, it's over. Pack it up. See you in 2029. No, this is what markets do between moves. They slow down. They shake people out. They get boring right before they don't. Okay, next, we have @QuietBuilder.eth and asks, crypto Twitter feels dead. Is that a bad sign? No, that's usually a good sign. When timelines are loud, that's when people are chasing. When timelines are quiet, that's when people are building or recovering from getting wrecked. Okay, next one is from @AltcoinAnxiety. Are you sure you can handle the answer? @AltcoinAnxiety asks, why do altcoins feel so weak even when BTC is holding? Because confidence isn't there yet. Altcoins need momentum. They need risk appetite. And right now, the market's cautious. Translation, people are not trying to get adventurous right now. All right, last one for today is from @HODLFlorida and says, I'm loving the volatility. It creates great buying opportunities. All right, I respect it. But let's be honest, you love volatility until it goes the other direction. But you're not wrong. Volatility is opportunity. The problem is most people only like it when it's going up. The ones who actually benefit from volatility are the ones who stay consistent through it. All right, good questions today. Some better than others. But if there's one theme across all of this, this market is in transition. Not breaking, not exploding, just setting up. All right, when we come back, I'll give you a little SENB project update and close things out with my final thoughts. Stay with me.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company. Fuel your life.
All right, before we wrap up, quick project update. On the SENB side, we're still working through the backend and timing for the airdrop to Tooker holders. It's getting close. We're just making sure everything is done right, because the last thing you want is to rush something like that and then spend 2 weeks fixing it. Now, on the Ember side, we're getting very close to finishing the next album, Road to Freedom, and we just released a new single, Echoes in the Dust, featuring Ember Vail and our own dev, Kyle Ryan. And this one matters, because yeah, we've got the animated world, the characters, the branding, but behind all of it, there are real people building this, creating, writing, producing, actually putting in the work. And this track is a little glimpse of that. Also, quick reminder, Ember has a new X community, Ember Vail Underground. And let's just say, if you're early, that might work out in your favor. All right, so let's zoom out for a second. This week we saw price pull back, sentiment hit extreme fear, ETF money step back, and timelines go quiet. And when you stack all that together, it feels like weakness. But markets don't always look strong before they move higher. Sometimes they look uncertain. They look slow. They look exactly like this. And that's what makes this phase tricky, because most people don't lose in the extremes. They lose in the middle. They get bored. They second guess. They go chasing something else while the market is quietly setting up the next move. So whether this turns into a breakdown or the foundation for the next leg higher, we're getting closer to clarity. That's it for today's show. If you got value out of this, like, subscribe, or don't, and just keep guessing. Appreciate you being here, and I'll see you in the next one. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.